This channel is for educational purposes only. Make sure you do your own due diligence before making any investments, and there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe. So today we are going to talk about the S&P, and I am going to go through a number of different indices, but I want to start out following up from a trade from last week, and I want to explain. I've talked a lot about entry in a lot of the videos that I've done, and I want to show you the reason why I think entry is so important for trading. If you're a longer term investor, you can get by without having really good entry. But if you want to be a shorter term trader, then I think that is a big part of the battle, is knowing where to get in. So let's go ahead and get started. I'm going to start with the S&P. And I've got the daily, right now I've got the daily on the right and an hourly on the left. And the reason why I wanted to do this, I wanted to follow up because we had signs of momentum slowing on the weekly chart. We had signs of momentum slowing on the daily. And I had mentioned last week where we had this pattern where we broke this trend line, came back and tested, and notice this was the first test where we were rallying back to a declining 18 right here, and that was also checking back to the trend line right at that level. And so that was a really good spot to put a shorter term trade on, because we know the backdrop is that the momentum is slowing on the higher time frames. Now, the way this played out, and as we discussed, it ended up getting a gap down to this level down here. And if you got in at this level as a trade to the downside, that is an excellent spot to look to be taking profits, and maybe even taking the whole thing. But I had mentioned at least taking half off on the gap down on the next day after the trade. Now, we had a move where you rallied up and came back and sort of tested, and then another good green bar to the upside. And what I mentioned last week is the question was, were we going to fail at the 18 and then work our way back down through these lows here and continue to the downside for the first time? Or is it going to do what the market's been doing, which is, you can see on the daily chart, just keep pulling back and then going to a new high, pulling back, going to a new high. You see how it did this over and over and over again. That's what we've been doing. And so the point I'm trying to make with the entry is, if you have good entry and you make a move like this, you don't have to make a big decision as to whether it's going to be like this or whether it's going to continue to the downside. You can take partial profits, even if you take half off at this gap down. And then as it starts to work its way up, maybe you could take a little bit more as it breaks out here. But at a very bare minimum, you're going to want to get out at a break even after a move like that. So once the stock or a market makes a big move in your favor and then starts to show structural improvement by getting back through the moving average, I don't like to let a good profit turn into a loss, and I would just scratch whatever I had left. So hopefully the overall trade is a profit. Now, here's what I'm saying about entry. If you had poor entry and you got in down here, or you waited for it to break and you got in down here, now all of a sudden it gets a little bit more difficult on the way back up to save yourself and have like a break-even entry. You can't really do that, or break-even stop, because you can't really do that until you have to prove that it's getting back up through resistance. So I just think the better you are at understanding entry points and getting in at the right spot, the more of a luxury you have to be able to see the trade through, take profits, and then see the trade through. So I wanted to follow up on that. Let's switch this to a weekly and let's start going through the analysis now. So we're here again. I mean, it's the same pattern that we have been that I've been describing now for quite some time. And then just recently, I would say, as market has moved up, probably starting right about here, we've gotten into, I think, a little bit more of a dangerous position for the market. And that's because MACD isn't confirming, ADX dropped down under 25 and continues to really drop down, just not seeing the kind of follow through or any kind of strength of the buyers. So we're in this, I think, still in a somewhat dangerous position. I think you have to be careful. And you can see today was not a great day. Obviously, And when I say today, I'm talking about Thursday. I'm doing this late on a Thursday. So tomorrow, or what I would call, what we should say is Friday, when you're going to be watching this video, we want to see how this reacts. Another bad day here, and sort of seal in the fact that we went to a new high and then maybe even close down for the week. If we have something like that, that would be a little bit of concern, cause some concern, especially based on the fact that the momentum characteristics have deteriorated. So we want to keep a close eye on this. And if it works out that we've got to look for another play here on the hourly, then go ahead and do that. Do it, like I said, you can put up small amount of money in the options and continue to hedge and take some small profits and then even scratch the trade. Or if it ends up just continuing to drop, you can end up protecting a huge amount of your portfolio. So it's a good thing to think about in this type of scenario where the momentum just doesn't look all that great. Let's go on to the QQQ. I think this is in a little bit better shape, but it's not great. The difference here is that the MACD is above its signal line in both time frames now, and it does look like to me that this 370 mark is decent support. If you came back down through the 370 mark, I would view that as a pretty big negative, especially on this daily, and probably would have risk down to 360. We don't have ADX confirmation in each, and so I'm still concerned with this, just as I am with the S&P. So got to be cautious about your entry points and new holdings and new buys. Get good at your entries using an opposing trend trigger into the higher time frame, and I think at least you'll get a smaller move in your favor before you have to make a decision on something. Let's look at IWM. So this continues to mark time. It looks like it's deteriorating, but I don't think that's what's happening. I think the MACD wants to work its way back down to the zero line. We don't really have a lot of selling pressure compared to the buying pressure on the upside. So I think this is still working its way sideways until the 18 and the 40 come together. And then in about a month, this could get very, very interesting. So we want to keep an eye on that. The Dow Jones, the DIA, is still okay, but I don't like the fact that this has run to a new high and MACD is going the opposite direction. I've talked about this in the past where when this goes to the downside while this is going to the upside. It's a little different when you're at a pullback. You don't know that until you go through a little bit of a rally phase. Now we've actually rallied up and hit a new high, and this is still in a declining phase below the signal line. So from a short-term standpoint, I don't like the looks of it. I still think this ADX pattern is okay, but we might have risk down to this 335, 334 area in the near term. So something to be on the lookout for, because we've got a similar pattern developed with the MACD on this side. So just need to be watching this and see how it handles the next 2-3 days. Not a huge change in the crude. We came down, and the fact that we broke the 18-week, we're holding the 40, but we broke the 18-week, tells me this is going to take a little bit more time. Now, I would not be surprised to see this move up and then come back down and then kind of work sideways a little bit rather than just go straight back up or break down. I'm not necessarily looking for a breakdown. We do have a higher low in price and a lower low in MACD. So there is a potential of a reverse divergence. The ADX is in pretty good shape. I'm not calling this quits at all. I just think it needs more time, especially looking at the individual stocks. I don't think they're ready to just take off. Gold keeps bouncing around. It had a nice reversal pattern, but it has a lot of resistance up here around 1820, 1830, something like that. So I wouldn't be in a big rush. The midpoint of this big red bar right here is sort of like the highs of these bars here. So we want to get back above that before we have any real interest in this. Again, it looks more like it wants to mark time rather than anything. This is one that I think is interesting, is looking at this treasury. We came down and found support, and it looks like we're rallying up. I mentioned the support was down around 105 to 110 in terms of the yields, and it looks like we want to work our way back up towards 140, 150. I think it's going to end up forming a trading range, but Really, this is not that bad. And when I look at the overall pattern, and we're noticing some improvement in the financials, and a lot of times the financials will move in the direction of the yield. So if this is moving higher, especially if it can get through these prior lows, that'd probably be a good sign for that area. Let's finish up with Bitcoin. So I think what's taking place here, we had this big move to the upside and then a massive drop to the downside. And now we're trying to run through a declining MA. You see how this 18 is declining. Normally when I see this, what I'm expecting is some type of a pullback or test while the 18 actually cups around like that. So we're going to make a little bit of a pull. I think what we're going to try and do is pull back while this cups around, and that sets the stage for the next buying opportunity. So I'm sort of encouraged by what I'm seeing here, but I think in the near term, I'd like to see a little bit better test of the area around the 18. It doesn't have to come all the way down there, but get a little bit closer and make a higher low. And if we see that, then I think I'd be a little bit more interested in this. Still have resistance at 50, so this is a good spot for this to pull back. That's the update for the week. Please post any questions or comments, and we'll see you next time.